Morning friends, this is Bhavik from Currency Advisor Desk presenting to you the currency morning updates. The Indian rupee dipped further to above 6450 levels on back of robust importer buying as market participants failed to understand what the exact message that the RBI is trying to giving it to the markets. Now what the RBI has done is, on the one hand, it has tried to suck away the short-term liquidity so as to punt away the rupee speculators, and at the same time RBI is also announcing that it is going to conduct an open market operation this Friday, that is buying of long-term bonds, so as to bring down the long-term yield curve. So this is what exactly the markets have been confused about, as to what exactly the RBI wants to focus at this point of time, whether it's the growth that is actually in their mind, or whether it's primarily curbing the rupee volatility, the rupee speculation that is causing the depreciation in this manner. Now, most of the emerging market assets and riskier assets are likely to be staying for a lot of amount choppy sessions, because the US FOMC minutes that had been released yesterday failed to provide a clear direction to the markets. It was crafted in such a way that it pleased both the participants, that is the hawkish funds as well as dovish funds. USD INR NDF market, New York market, gave a close at 6570 levels. Now chances are that this may spill over to the Indian domestic market. So we are already in the rupee today opening at around 6503 and crossing the 6510 levels. However, now currently it is at 6480 levels on back of exporters selling at high levels. Now what is happening is, whatever the rates that are being speculated in the different offshore markets like Singapore, New York or Dubai Gold and Commodity Exchange, these markets, these rates are simply getting translated to the Indian market. So it is the spillover effect that is hurting the rupee much, rather than the other theoretical fundamentals like the current account deficit, fiscal deficit, and the lack of political planning by the government. We also had the Chinese HSBC manufacturing PMI for the August month, which came in at its highest level in 11 months at 50.1. So this may be somewhat a rejoice for the different Asian market and emerging market equities and commodity and currency class. US dollar index at 81.5050, substantially higher than its previous close, as markets increasingly weighing the possibility of QE tapering. These are the technical overview for the August futures. USD INR, which gave a close at 64.47, overall likely to be bullish for today. Action which is buy on dips, support at 63.54, resistance at 64.61. Euro INR, which gave a close at 86.59, overall likely to be bullish for today. Action which is buy on dips, crucial support at 85.42, resistance at 87.83. GBP INR, which gave a close at 101.45, overall likely to be bullish for today. Action which is buy on dips, crucial support at 99.80, resistance at 103.10. JPY INR, which gave a close at 66.26, overall likely to be bullish for today. Action which is buy on dips, crucial support at 65.26 and resistance at 67.40. Key events to watch out for today: we have this preliminary PMI numbers current month August for Eurozone as well as America, US, and we also have the US jobless claims week on week. That's it. Thank you.